The following is a presentation of TFNN.
11 seconds. You've got 10 seconds. The countdown going on right now. Morrow up to Schultz. 5 seconds left in the game. Do you believe in miracles? Yes!
Let's go to Ilka in Boston. Ilka, thanks for calling. Thanks for holding.
How are you?
I'm doing wonderful.
Steve, seriously, you guys are unbelievable. You are doing wonders for all the traders.
Well, thanks. We appreciate that.
The Trader's Edge. Now, Steve Rhodes.
Good morning from TFNN. Welcome to the June 30th magnificent Monday edition of today's opening bell on the Trader's Edge. I'm your host, Steve Rhodes, author of Mastering Probability, the daily newsletter service that is the intelligence for creating financial freedom. Hope everyone out there had a wonderful weekend. Let's make sure you and I that we do all that we can do to have a magnificent Monday. I know I'll do everything I can during the next couple hours to teach you how to master the tools for trading, and that includes the tools of the mind. Because when we master the tools of our mind, we begin to think like a strategist, and that's really important as it applies to, quite frankly, every aspect of our life, but especially trading. Some of the tactics that I use here that I'll teach you about technical, that I use for technical analysis, I refer to the A to B equals CD pattern. That's a little lightning bolt-looking pattern. We'll look at that today. Fibonacci expansions and retracements, Gartley and butterfly patterns, and of course, I like to use Japanese candlesticks because these are the signs that the bulls and the bears make for you and I each and every trading session. And unlike most traders who focus only on tactics, you and I know that to really achieve our goals and our dreams, we've got to always think like a strategist. So the real key to trading and investing, the key to get our money to work harder for us than we do for it, is to have a strategy. That's what I call Mastering Probability. It's also the name of my daily newsletter service available here at TFN.com. You see, using tactics without strategy, in my opinion, that's a recipe for failure. And failure, folks, it's not an option in our playbook, which is not to say that we don't incur losses, because losses are part of any successful trading strategy. It's what's called spoilage, just as throwing food out of your refrigerator, and many other things like that. How about time? How about time you put into a sales call and you don't get the deal out there? It's just part of the program. But to limit our loss, to really control our risk in trading, we use stops. That means we've got an exit strategy, one that covers both sides of the trade. You see, we identify where a projected exit price is if the trade works for us, just like we produce a stop if it goes against us. And when we put that trade into our system, it's called a bracketed order. OCO, one cancels the other. And if we use a system like this, no matter what, in whatever type of market, you would not ride a market down like many folks did from 2007, 2009, the flash crash. You can go on and on and on. So today and every day, let's do what we can do to think like a strategist, because strategists, they will slay the tactician all day long. And let's take a moment to review one of our tools, a tool I call the promise of the future. Folks, there's one thing that can mess up one's mind, and it's what I call doing less than we can do. You see, doing less than we can do causes all kinds of damage to our soul somehow, and I don't know how it works. I just know that being less than we can be, trying less than we can try, somehow damages our mind, damages the way we think, damages our self-image. Now, that's the bad news. But the good news is that the moment you and I make a shift by doing more, by becoming more, we see immediate rewards. Things just seem to fall into place. And I'm not talking positive thought. I'm talking action. And as you know, I believe it takes massive action, and better yet, massive determined action. Yes, the promise of the future is bright. Just take massive determined action, folks. It is Magnificent Monday. This is Tiger Financial News Network. I'm Steve Rhodes, and welcome to the show. Right now, we've got the Dow futures down about 10 points. They're trading out at 16,745. S&P futures off 3/4 of a point. They're trading out at 1951 1/4. Russell 2000. off about 2 points at 1180. NDX NASDAQ futures, they're up about 2 points at 38.33. Goldilocks back $4.50 right now, trading out at 13.15. Silver back 22 pennies at $20.85. Light sweet crude off 26 pennies at 105.50. Our call number is 877-927-6648. Happy to take your call, answer your question, assist you however I can. A quick peek across the globe out here. The DAX in Germany up 15 points, flat market. The FTSE in the UK off 10 points, flat market out there. The Nikkei finished the session at 15,162. That was up 67 points, about 0.4%. Hang Seng down 30 points in that market, basically unchanged, 0.1%. Hang Seng on the Shanghai on the other hand was up 12 points. That was up about 0.6%. So where do we begin our day out here? You know, it is June 30th. What should you expect in the markets today? Pretty much a flat to maybe upward moving market out here. We'll see. It is the end of the month. It is the end of a quarter out here. Let's take a look at, and as far as what's moving in the market out here, Maybe I need to redo my system. There's only two stocks I show really moving to the upside. No, that's not the case out here. You got GoPro, GPRO. That was the big hyped IPO from last week. It closed at 35.76. It's trading at 37.35 right now. Mankind Corp out here, MNKD. Nice move here. It closed at $10. It's trading right now near 11. 10.97 was the last trade out there. Twitter to the downside. It closed at 40.93, just off about not even 10 cents out there. Well, yeah, not even 10 cents. So we won't pay much attention to that. Let's go take a look at the futures. Let's take a look at the daily charts out here for the futures. Let's start off by taking a look at, let's look at the Dow futures. Now, but put this on my screen out here. We take a look at the Dow futures. What do we know about the Dow futures? What do we know about this chart out here? Now, this chart here is, by the way, this is my e-signal chart that we're looking at if you're watching us on Tiger TV. If you're listening on your radio, your mobile device at tfn.mobi, we appreciate that very much. Remember, you can catch the archive of this show on Channel 9. That way you'll be able to see the replay. If you're sitting here listening to us live on one of your smart devices out there, you can always go to the homepage at tfn.com. Upper right-hand side, you'll see a little button. Click on that. You'll be able to see the chart streaming live. And, of course, if you join our Tigers Den out there, you'll be able to see each of these charts in HD. Now, when we take a look at the daily chart here for the Dow, you're going to see across the upper portion, you're looking at the upper right-hand side of my screen out here, you're going to see our friends from TAS, the market profiles that they've, with their system that they've generated. They help us to identify what's referred to as the unfair high, the unfair low. So unfair high meaning resistance, unfair low meaning support, and then the area where there is a lot of congestion, that point of control, that little blue cyanish type color. Now, inside of the Dow futures, and we're looking at the Dow because you're going to see a tale of two different markets. It's a daily chart that we're looking at, by the way, on my screen out here. And the Dow is the weak link out here. We're going to take a look at the strong link, the NASDAQ. Now, utilizing the market profiles, and today we're going to use a number of different things. Once the market opens, we're going to start with a blank chart. We'll take a look at stocks moving up, the stocks moving down, and just a way for you to take a look at a number of these different tools. Remember, these are all tactics out here. You need a strategy in order to trade these markets. And if we take a look at one of the tactics is using market profiles to identify support and resistance. 16,769 happens to be what's referred to as that unfair low, that level of support, meaning price should really test that area, close above that area. What we've seen here since the trading session of last Tuesday, June 24th, the Dow futures break and close below that market profile, which has been in place here since the trading session of June 12th. So pretty decent time frame out there. The longer that it's in place, the more meaning that it really has out here. So if we take a look at June 24th, actually closed out at 16,752. Remember, the benchmark is 16,769. So it's not as if it really broke with conviction out there, but it did close below that. And certainly would say if you were trading on a daily chart out here, you were long the Dow, and you were swing trading, it would really suggest that you really tighten your stop up out here because that level should have held. Well, next trading session closes out at 16,771. Hey, just slightly above the 16,769 out there. still a good reason to keep a tight stop. Next trading session, if you can see out here, the close on that, by the way, is at 16,762. Friday's close, where was that at? That was at 16,757. So just really hovering around this area. Now, here's the deal. Right now, the Dow is the weak link out here. Is the weak link, is the Dow going to be able to pull the markets down? I don't know the answer to that. If it does, where the Dow is likely, Dow futures, I should say, are likely to gravitate to, the first place that we're going to look on the stock chart is where? It's going to be a swing point. And your question is, hey, what's a swing point? Very good. Swing point is this. It's less like driving down a street out there, a highway, what have you. It's a major type intersection. You know, when you're driving down the street, you got all these little crossroads, but many of you don't have a stop sign or what have you. Well, here's where the stop signs are in the market, and that's what you're going to look for. In this case here, stop signs mean, in this case, we saw the Dow futures in the trading session of May 14th. That was a little bit of a stop sign, May 14th, May 13th out. Price had been moving higher. All of a sudden reversed and moved lower out here into the low on May 20th. By the way, in the Dow futures out there, that low is 16,238. So there's your major intersection. That basically becomes our swing point out here. That becomes your target area. Oftentimes, if you've been listening to Tom for a while, he refers to it as price. If price could get back there, making a 100% move of a move. That's the definition of price moving back into the swing point. Does it have to get down to the low? Absolutely not. It just needs to get into the swing point. And the range of the swing point is 16,238 to 16,433. And that really becomes your target area. If you were short the market, which you could be. You could have been short from anywhere up at 16,889 inside the resistance area. Depends on the strategies that you want to play. You could have said, hey, I'm going to go short it at 16,889, this being the Dow. And if it closes above that, I'll go ahead and exit. In fact, I'll go ahead and exit and go long out here. So we've got price now breaking below this area, or just really traveling on this unfair low, on this support area. Even Friday's session out here, and the area that you're targeting to the low is going to be that swing point out there. Now, it doesn't mean that it has to get down there. And that way you want to be able to monitor what's price actually doing. What do we use? We use retracement levels. Those retracement levels, if we take a look at our retracement, we'll go from the low of that session, that swing point out there from May 20th, and we'll go all the way to the highest high that we have in here in the move up, and that took place on June 23rd out here. That was at a price point of 16,911. Now, we use that retracement ruler as a guideline as to where price is also going to gravitate to. You see, on a pullback, price doesn't have to get down to that swing point. It might go to one of three floors out there, the first floor being the 0.382 retracement. Well, inside the Dow, that's 16,653. If it gets down there and it makes a beeline and it takes out the highs from June 23rd, you're going to have a very large A to B equals C to the upside, especially if it takes it out with volume. But a normal move, just a normal retracement, a normal dip, if you will, would actually take the Dow futures to 16,495. So unless the Dow futures are able to get above 16,769, do with any kind of conviction, you'd have to say the primary targeted area is going to be 16,495. If it's moving down there with volume, with an ugly bar out there, well, that gives you 16,382, and that'll make that 100% move of a move. That'll take price back in the May 20th area out there. When we get back, we'll go take a look at the NASDAQ because it's moving higher out here versus the Dow moving lower. We'll be right back, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Not much change here in the markets. The Dow futures off 9, S&P off 25 cents. Russell 2000 down $1.30 right now. Goldilocks back 6. We'll take a look at gold here in a moment. Let's go take a look at the Nasdaq. So we got to take a look at the NQ. In the case of the Dow is trading below its support level. In the case of the Nasdaq, it's trading above its resistance area. Reason why we're really not studying the S&P at this stage and the Russell 2000 is kind of in the middle. You know, they're just trading inside a little bit of a trading range out there, so they're not really providing us with a ton of information. There's information to be gleaned for sure, but let's take a look at the Nasdaq. Now, when we take a look at this chart here, if you're watching this on Tiger TV, a couple of things. One, let me zoom in on it, and then I'll come back and show you what I want to show you. So if we take a look at, because I know what the question is going to be after I show this to you. At least I think it's going to be in somebody's mind out here. Now, if we take a look at the market profiles, these market profiles out here, these were generated back on new market profiles back around the June 13th time frame. If we take a look at resistance, 37.99.50, that is the level. Price got above that, did it on the trading session of June 25th. So on June 24th, the markets had given us key reversal sessions and so forth. Not so much inside of the Nasdaq, but inside the other markets. And on the very next trading session, they said, the heck with you guys. I'm going higher out here. Closed above the resistance level, 37.99.50. If you were long, the NASDAQ at this stage to the futures market. You want to take a look at a couple. It depends on where you got long at, but you certainly don't want to see it close back below 37.99.50. Testing that area, hey, no problem. Closing back below it would suggest to me that price ought to get down to about 37.62. You are at 38.33 right now. That would be unnecessary heat for you to take out here. But the question is going to be, okay, so you're above, and when price travels, I can get this out here. When price travels above resistance or below support, what does that basically mean out here? What it means is it's just like driving, and when you're stuck in traffic and you finally get that break out of traffic, you can put the pedal to the metal. And you can drive as fast as you want until you get pulled over. Well, where would you get pulled over here? Pulled over means where is price likely to head to? So as I pull this stock chart back now a little bit further, one of the favorite patterns, one of the more important patterns to always be paying attention to, markets are doing one of three things. They're either going higher, they're either going lower, or they're going sideways. And if we take a look at the NASDAQ futures, you're going to see a sideways pattern out here. That sideways pattern beginning right around the time frame here. We're going to call it the trading session of November 26, 2013, probably shortly after we got back from Thanksgiving. And they were going sideways, and a little box. It's not going to be the easiest to see here. I've got to figure out a different color mechanism out here that would work for you. But it's this little, but if it's going, I wonder if I could do that. Didn't mean to do that there. Let me delete that. Okay. There we go. It's this little shaded box here. But if you take a look at, in essence, the lows right around November 26, priced out at 34.03, you'll see that as price was moving up, it came back and tested that area on December 18th. December 18th gets down to 3,400. Test that area again back here on February 5th. Test it again back here on April the 14th. Now, between the time period of February 5th and April the 15th, it went ahead and moved to a high of about March the 6th out there. That was an important swing point, 37.23. Comes back down, can't really break out of that level, comes back down, tests the low, travels up into that swing point high again, that consolidation box back on May 29th out here, travels sideways for just a few days, and then finally breaks through it. Now, when it broke through, it also was where it was above the unfair resistance, above the unfair high out there. What does that really mean? It means that if you want to get a price projected, this market is going to take off topside. I say if at this stage here. What you're looking for is a price projection equal to or greater than the consolidation. You do the math on this. The low is out here at 30. We'll call it 3,400. That'll make it easier for Stevie. So 33.97. So we're going to say from 3,400 up to a high of 37.23. So that is a nice 300-point range. If you just add 300 points on top of the 3,700, you're looking at about a 4,100 price projection out there. And that means that what you would see here, you'd see the NASDAQ futures stay above their resistance level, certainly not break the support area at 37.62, and that would in essence be your price target out here. But you see, you've got the Dow saying differently, you've got the NASDAQ saying one thing, you got the Dow saying another. And then, of course, you've got the ES Mini and the Russell 2000 saying, I don't know what you guys want to do out here because they're traveling with inside a consolidation. We get back, we'll go see how this market's going to pop or drop, and then we'll go take a look at Goldilocks. We'll go take a look at its levels of support and resistance. Its level of resistance was tested here earlier this morning. We'll be right back, folks. Now, that was Light Sweet Crude that was tested. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization execution capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
To the races. We got the Dow trading down 38 points, trading at 16,813. S&P's off 2 at 1959. NASDAQ Composite flat at 43.98. Russell 2000 down about 3 points at 11.86. NDX 100 flat. New York Stock Exchange off 16. Goldilocks back $6. Silver down 30 cents. Leading the charge. The upside is PPG Industries. PPG being the ticker symbol, up about $7, 3%. GW Pharmaceuticals, GWPH, up $5, up 5%. GoPro up $3, up 9% this morning. Norfolk Southern up a couple of percent, up $2.40. Tesla up $2. Bank New York Mellon BK up $1.52. Monster beverage out there, MNST, up about 2%, up $1 and change. To the downside out here, looks like we've got Boeing. BA is a ticker symbol off $2, down 1.5% here this morning. They're leading the charge to the downside. We've got Velocity shares, silver. I don't want that. We got Phillips 66. PSX is a ticker symbol, down $1.21. Marathon Petroleum off 76 cents. PetSmart off 99 cents out here. Okay, let's go back and take a look at Goldilocks. We'll look at it a couple different ways. Let's go see what gold is doing out here. Now, we're going to take a look at the daily chart here for gold. We're going to take a look at its market profiles. What do we know about gold? We know gold here broke through a market profile in the trading session of June 19th. Did it with conviction out there. Wide price spread, accelerated volume, and then just simply has petered out. So it is as if it just simply ran. It was not a marathon that it was running here. Just simply ran the sprint. It was a one-day, a one-hit wonder thus far. But what it also was doing, if you take a look at the very bottom portion of my chart out here, my screen, you're going to see that is the 14-period relative strength indicator right now, trading out at 64.82. It had gotten up to a high of about 73.16. Anything above 70 takes you into a nice overbought range out here. So price has just simply been moving. It has been moving itself sideways, consolidating sideways, working off an overbought condition. So even though this was an exhaustion move, it got exhausted in one day getting up to that price, the way that it has behaved by not coming back to that support level, by not coming back to the breakout level, by just simply moving sideways, to me, that's more bullish than it is bearish behavior out here. So what does that mean? Well, it means first your travel, where is Goldilocks trading at? It's trading right here into its point of control, its congestion area, which is priced out at 13.1290. It's traded at 13.14. So we're going to say it's right there, kind of in the middle of nowhere zone is. Now, if price can pull back, it has not done that yet, but if price can pull back to the 12.99 level and hold, that would be your support area. That might be your area to jump in on Goldilocks, maybe even on some mining equities out there. If we take a look at retracement levels, let's do that. Let's come off of the lows out here, and that is on June the 3rd. That price point low, about $12.40 and 20 cents out here, all the way to the high that was put in here most recently on June 24th, right at a price level of $13.2660 out here. We'll also see that at $12.93. So you got $12.93 and $12.99. You've got the support level of the market profile at the $12.99 level and the 0.382 retracement, just a normal. Well, that would be just a dead cat bounce. That would be, and if that's all that Goldilocks does, don't know that it will. But if it pulls back to 12.93.60, hey, not too shabby, especially if it holds 12.99.20. That then could set up an A to B equals CD to the upside. I would need to draw that utilizing one of my other tools out here, because the tool I've got built on the eSignal system just attaches to swing points. But I've got something else I can do right here on my Ensign Windows software, which is being fed. The data is feeding this is the same data that we're looking at on that chart there for eSignal. So here's the retracement level. I'll draw those on my screen as well. You'll see again the 0.382 retracement area, 12.93 out here. Now, this red squiggly line going across my screen, that's a 200-day exponential moving average. And we can see that once price broke above this is also holding as a support level. The low so far this morning has been the low so far this morning has been 13.11. 13.10.80 happens to be the 200-day exponential moving average. So that area, that's bullish, holding that zone. You'll see a little diagonal line on my screen out here. That's a diagonal line. It's a trend line coming off of the high back here in the trading session of October 4th. That was out at 1797.70 out there. And if we, 1798.10, October the 5th. So if we use that high, and then as I use my next touch point, this little high out here from the trading session of March 7th, that's going to run us right into where price just kind of stopped dead in its tracks on that exhaustion move on a trading session of June 24th out there. It's a trend line here that's just been broken by moving sideways. That never blows my skirt up when it does that out here. You want to see some kind of conviction. Nonetheless, if the retracement gets down to that 0.382 and we reverse from there, then your price projection here is your A to B equals CD2. Your A point being the low on June 3rd, your B point now being the high here on June 24th, and the retracement down here into the 0.382 retracement, that would take you to 12.93. That would give you a 1-to-1 A to B equals CD to the upside of 13. 1478. That would take you right back into the most recent swing point high, which is your targets. Really how we started the morning off, by taking a look at, hey, where's your targets on any kind of moves out here? It's always those swing points. They just act as a little magnet out here. That swing point high on March 17th is at 1392.60 out there. So the price range on a pullback, and look, doesn't have to necessarily pull back to 1293. It can do whatever it wants to do. If it pulls back, though, to 1293, it starts doing it with volume accelerating. Starts doing it with a nasty-looking candle. We don't see any kind of reversal at 1293. Then that offers moving back to the 1273 area. That is, in essence, where gold broke out of, which was the June 18th, June 19th time frame out there. So that is our look at Goldilocks. Now let's go take a look at what's going on inside the markets, inside some of these stocks that are moving to the upside, to the downside. So let's go take a look at today's movers and shakers out here. Let's start off with PPG Industries. PPG is a ticker symbol. Let's see. PPG Industries is going to buy Mexico's Consorcio Comex for $2.3 billion out here. So they get a nice little pop. They're off their session highs. Let's take a look at the stock chart out here. Now what I'm going to do as we take a look at this is, well, I think I'm going to do that. Let me see if I'll do it on this. No, I'll do it on something that's moving to the downside out here. Well, yeah, I'm going to, because this is at new highs out here. So let's get a feel for where PPG Industries is moving to. Now, what we want to do here is we're going to use an A to B equals CD tool. And that A to B equals CD tool, we're going to start from a significant swing point low, and that takes us back here into February 5th. Be just like the markets, right? So that, in essence, is going to be our A point, the low of that trading session. Our B point here is going to be the highest high before we see another retracement of significance. That's going to take me here to the trading session of March the 4th. That's going to be my B point. Pulls down into a low here, forms a little doji on April 15th. That's my C point at 185.18. The 1-to-1 price projection, 1-to-1 A to B equals CD to the upside. And there was about a 0.618 price retracement into that C point out here. Gave you a projection of 212.95. Now, the inter-session high that we've seen here so far today is at 213.01. 213.01 versus 212.95. Are you kidding me? How does that work, folks? It just works, isn't it? That's the old lightning bolt pattern. So the first objective here, and on the trading session where it breaks through a swing point, does it with volume, breaks through a resistance level of the TAS signal box, it goes ahead and completes an A to B equals CD to the upside out here. Now, the B point was April the 4th. The volume on that was 1.4 million shares. As price got above it, it did it with only 786,000 shares. So there hasn't been a ton of conviction as it broke through that B point. This would suggest to me that in the case of PPG, it's probably running out of gas out here as it completed its 1-to-1 A to B equals CD to the upside. Does that mean that you go ahead and short it? No. There's nothing really ugly about this stock chart out here, other than maybe if it ever did pull back, it'd be taking a look. I'd have to say, well, you might take a look at the trading session of April 15th, but I'd say no, not so fast. Why would I say not so fast? Because PPG here, the trading session, here's how you buy a breakout, right? Let's pull this back here. Let's take a look at this. We're going to pull this back, move it a little bit sideways here. Look at what PPG does between April 16th and April 17th out here. Moves higher with what? With conviction. Accelerated volume, wide price spread. Why do I say wide price spread? If you only looked at that candle there on April 17th, you'd say, hey, that does look like a wide price spread candle. Well, you need to fill in the gap out here. Always important to fill in the gap. So this thing broke out with volume. Volume, by the way, 1.7 million shares, which was moving into a swing point that only had 1.4 million shares. It said it was going to at least go test the highs out there, and it pulls back to the breakout area. And that's a trading session here of April 28th. It pulls back with 791,000 shares the day before 7/14, and it was pulling back into a day, not the actual breakout day, but the day prior to the breakout, it was pulling back into that with light volume because that had 1 million shares out there. That's how you like to be able to buy a breakout or price coming back into a breakout area, and that is on PPG. But at this stage here, you'd have to say that it looks like it has hit its first target. Doesn't mean it can't go higher, but looks to me like it's hit its first target. Ought to pull back to where? Ought to pull back probably just like it did the last time, probably to the top of this gap area from June the 27th, right around the level of 204.20-ish and change. That is on PPG Industries. Let's take a look at something that is moving to the downside here. Rayonier. RYN, no idea whether or not I got that name proper. But we're going with it until I am corrected otherwise. Now, this thing is down big, and it's down with some volume. Let's go take a look and see where this thing is traveling to, where this thing fell out of bed. Now, what I'm going to do here is I'm going to go ahead. I'm going to turn off most everything here. So let me turn that off. Let me turn this off. Give me a moment here. I don't want to turn that. That's this. We'll come back to this stuff. I want to just start with a blank chart. Okay, so now we got a blank chart with the exception of the earnings dates on the bottom of my screen out here, so we can take a look at it. So if you're watching this on Tiger TV, we're starting with a blank chart. The ticker symbol here is a daily chart. Ticker symbol is RYN. I'm not going to go ahead and pronounce it again out there because Rayonier, I don't know if it's spelled RAYOIN or ONIER out here. Now, what do we know about this stock chart? Oh, I think I got rid of the volumes. I need to at least put the volumes back up on the screen. There we go. Okay. So what do we know about this stock chart as we're taking a look at it? Number one, we take a look at the trading session right here on October 25th, 2013. This thing fell out of bed. And it fell out of bed how? Fell out of bed hard with volume. Big accelerated volume, creating a big, huge gap out here. And that was a sign of what? That was a sign of institutional selling. That was not enough yous and me's out there to be dumping this equity. Now, you and I, we might have been dumping it, but that was not enough of us's to have been dumping it. So the institutions, in essence, were dumping this equity out here. Now, here's another interesting thing when we take a look at the stock chart. This is how in bad shape this thing is, and that's really what the signal of this morning is out here. I don't know what these guys do and what their problems are, but huge problems out here. Now, number one, we saw that conviction was selling to the downside. Moves to lower price, and the actual lower price that it gets down to is on the trading session of December 17, 2013. Now, the most bullish candle configuration that you can get out here, one of the most bullish candle configurations, what's called an island bottom or an island top. In this case here, the trading session of December 17th, it creates an island bottom pattern out here. What does that mean? That means the very low of the session of December 16th is 41.85. Then it gaps down the next trading session, the high of which is 41.23. So you have a gap out here. The low of the very next session is at 41.48. It, too, has a gap. That gap is what creates this little island out here. Now, that should have been the most bullish pattern. Now, if somebody were going to trade that to the upside here, you'd have to go back and say, well, something to think about because, man, the institutions were unloading out here. Maybe I ought to wait for a little sign of strength out here before I go take a gamble, before I go take a peek at this equity. Well, guess what? You actually got a sign of strength inside this equity back here on January 27th. It moved topside with about 5.6 million shares. That should have said, well, okay, where are you going to go to? Now, instead of this case going to a swing point, you've got to say, I'm going to just go back to my supply line. Because remember, there's a whole lot of folks out here that really got stranded up at the highs on October 25th. 1.4 million shares went between the price levels of $54.90 to about $58 out there. So there's a lot of folks that are sitting in a really bad position. And, of course, there's some folks right back here from the trading session that said, hey, this thing was gapping down. I like this company. I'm going to go ahead and buy it at a discount. That was on October 25th. And that has even more passengers. That has 7 million shares. And that says that's your supply line, the top of which is right around $50.78 out here. So you got this nice bullish pattern out here. You did get a sign of strength. And the problem for this equity now is that island reversal should not have been taken out. Yes, it should have struggled as it did as it was moving into the supply line out here. But this morning, gapping down below the low of that island reversal out there, it too has an A to B equals CD to the downside. Let's go add that pattern in here. Let's put on the A to B equals CD. We're going to start here and take as our A point. Let's just take the small one. Let's take it from where it kind of fell off of planet Earth, the high out here, which was October the 18th. That becomes our A point to the downside. Our B point's going to be that island reversal, and the C point's going to be the high that it got to here most recently, which was on June the 6th. This has a 1-to-1 price projection. This thing is going to $29.47. I'd have to say probably even less than that. This thing's probably going about $24.21. RYN is the ticker symbol. We'll be right back, folks.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Welcome back, folks. Dow's off 37. The week link out here. NASDAQ Composites up 3 points right now. S&P off a point. Russell down 4. NDX up 4 points out here. New York Stock Exchange off 13. Let's go check in on, let's go see what the VIX index is doing out here. So we got the VIX index. It's trading out right now at 1161. You can see this morning here kind of gapped up a bit. What do I mean gapped up? Well, if you take a look at where it actually closed here on Friday, closed out at the level of $11.26, opened up this morning, opened up at $11.75. The key level to be watching here today inside the VIX today is going to be $12.26. That is the 50-day exponential moving average. If price closes above that, if it ever does close above the 50-day exponential moving average, that is going to create some carnage inside of the market. What's our friend the Euro Yen doing out here? Well, if we go take a look at it, let's go see what it's doing on its daily chart out here, traveling a bit higher here this morning, but really it has been traveling sideways. It has rejected so far the lows. So this has come down and has tested the swing point here from June the 12th. June the 12th, the top of which is 138.32 out here, and came down and tested that level back here on June 26th, tested on Friday, tested again today. Keeps fighting that area here. That's the nice 0.786 Gartley buy pattern that is in place here. And clearly, if this area fails, we should see this move down into the bottom of its rising price channel, but I suspect even lower than that. But we'll take things one day at a time out here. Not a tremendous amount of information being provided to us by the currency pair, at least when we take a look at this stock chart out here. Let's go take a look at a couple of things here that are also moving in the marketplace. Let's see, we've got percentage-wise, biggest mover here is Dicerna Pharmaceuticals out here. Researchers demonstrate the promise of therapy in preclinical model out here. So let's go take a look at this, see what it is traveling up into. So this looks like a IPO from back on January 30th. Not exactly the type of IPO you want to see. What I mean by that is it traded up as high as $46. Right now it's trading at $22.15. But let's take a look and see what it's actually doing here today. Today it's taking out a swing point of a small A to B equals CD to the upside. That swing is from June 11th, 350,000 shares so far today, then 211,000 shares. Let's go get its price projection out here. Your A point going to be the swing low right around June the 5th. The B point, that little doji there on June 11th. The C point looks like somewhere, I don't know, somewhere right around here, maybe on June the 25th, the low out there. 1-to-1 A to B equals CD, which is what it's headed to right now. It's 23.59 out there, 23.59 to 25.24. Would be a natural place for it to move to and then maybe go ahead and pull back a bit. That is on ticker symbol DRNA out there. Let's go see if I get any percentage movers to the downside out here. Already covered the first one. The next one out here, the Container Store, TCS, is the ticker symbol. It's off about 5% here this morning. Let's go see what it's doing. It's trading below its unfair low. Not a good thing if you are bullish in this stock. So now the question is, where is it going to head to? Remember, that swing point always becomes the target. That swing point happens to be the May 22nd low out here, the top of which is 26.37. The low of which is 25.16. Volume of 231,000 shares. Today it's moved down with 111,000 shares. So you got some volume moving to the downside. Looks like the Container Store is going to check and see just how well it can contain price as it gets down to that May 22nd level. Folks, it is Magnificent Monday. Thanks so much for joining us. Have a great day. Look forward to seeing you in a few or seeing you bright and early tomorrow morning. Take care now.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
You're watching Tiger TV.